This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. You know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices.
Hello, everyone. This is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Tuesday, January 2nd, 2018, and this week we're going to be looking at the best dividend stock to buy right now. On to our opening slide. It's called the setup and the approach. Now, our key objective is to find a high probability upside potential stock. The key tool we use is a financial model, a proprietary tool we developed that uses multiple valuation approaches across over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, based simply on the investment opportunity. An easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we're using a form of triangulation to locate a future stock price using different valuation methods. To the backdrop. Now, truly viewed, creating such a model is daunting, but I believed I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a finance and development guide to judge the research we reviewed. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections they share with the public. On to the next slide. Point worth remembering, these are views based on today. An unforeseen economic conflict or regional conflict or revised policy can change these expectations tomorrow. The benefit of using a professional money manager like Conner Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is reason for concern. And now, so what did our model find for you this week? We found that the best dividend stock to buy right now is in the entertainment industry. On to the next slide. It's entitled Industry Overview. The entertainment industry is comprised of companies that include television broadcasting and film production, along with mobile streaming and other on-demand innovation. Now, just to level set, the 10 largest competitors by market capitalization are Comcast, Walt Disney, Charter Communications, Time Warner, 21st Century Fox, Rogers Communication, Liberty Global, Liberty Broadband, Dish Network, and Viacom. So I'm sure some of those names are familiar to you. The growth drivers in this area right now are rapid digital media adoption, mobile streaming, and new on-demand innovation. So the challenges specific to the industry right now is that a lot of companies are evaluating merger and acquisition opportunities to drive growth amid increasing competition. And now for the big reveal. The best dividend stock to buy right now is a company called Viacom. The ticker symbol is VIAB, and we see its 6-month upside potential at greater than 50%. On to the next slide is called Quick Facts. Here's a business summary description. Viacom operates as a worldwide media brand. The company creates television programs, motion pictures, short-form content, applications, games, consumer products, social media experiences, and other entertainment content for audiences. It operates through two segments, media networks and filmed entertainment. The media networks segment provides entertainment content related to brand products for consumers through approximately 250 locally programmed operated channels, and these includes the brands Nickelodeon, Comedy Central, MTV, VH1, Spike TV, BET, Country Music Channel, TV Land, Nick at Night. So that's a good business summary overview. The website is www.viacom, that's VIACOM.com. The company is headquartered in New York, and it has 10,750 employees. On to the metrics slide. The annual revenue for Viacom right now is $12.3 billion. The net income is $1.9 billion, and the cash from operations is $1.7 billion. The operating margins for 2017 are tracking to be 26.0% and are expected to increase slightly in 2018 to 26.5%. On to the valuation metrics. The trailing price to earnings ratio right now stands at 7.7, and the forward PE ratio now stands at 6.9, which is a good relationship. A declining PE ratio from trailing to forward implies increase in earnings. The PEG ratio is at 1.5, not too expensive. The price to sales ratio is at 1.0. The price to book ratio is at 2.1. And the enterprise value to EBITDA ratio is at 7.7. So overall, current valuation metrics are not expensive at all. The dividend yield, which is what we highlighted the stock for, is 2.8%. So we have a stock with a strong dividend yield, and it's expected to increase in value. The average dividend payout ratio is 30%, which means the company on average pays out 30% of its earnings as a dividend. On to the next chart is a 12-month price chart for Viacom. The stock has been quite volatile over the past year. In April, it was at a high of around $45, and now it's around $31. The stock has been as low as $24 during that period. And the reason for the pullback is due to some failures in planned acquisitions and changes in management. On to the next slide. It's called Looking Back and Looking Forward. Looking back, Viacom has received $1 billion from selling part of its Paramount Pictures ownership interest to two Asian investors. So that's allowing them to put some capital into creating more content. The company has refocused its television brands to tie to its Paramount studio. And throughout 2016, there were internal power struggles among senior management / the Redstone family. So that's looking back. Looking forward, new senior management will remove uncertainty about the strategy and direction of Viacom going forward. The company has entered a deal with Charter Spectrum to offer Viacom's content on Charter's and Spectrum's basic cable package, which is good. And growth is occurring in affiliate revenues and international media segments across Paramount business segments. The next slide is called the Why Now, the bull rationale. The fundamental reasons behind why we think this is a good stock buy right now is that increasing revenues and sales per share are expected over the next 6 to 12 months. The there's an expectation of a decreasing in expenses per share. As we mentioned earlier, the operating margins are expected to increase in 2018. Right now, the company has low valuation metrics, which makes it an attractive purchase opportunity. And additionally, the company is planning to buy back some of its shares over the next year, which usually pushes up a stock's price. On to the summary slide. The financial statement quality of Viacom is good. The operating margin trend is respectable and improving. The price pattern trend, as we mentioned, has been volatile, but we're optimistic about the future. The industry outlook we're describing as flat because a number of companies will be trying to make mergers and acquisitions, and all of them will not be successful. The recent closing price for Viacom is $30.81. Our 6-month price target, which is a bit optimistic, admittedly, is $50.31, and this gives the stock a 6-month upside potential of greater than 50%. So it's for all these reasons that we believe that Viacom is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care.
Hello everyone, this broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we developed some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement, and that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connermg, that's CONNERMG.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and you would like to receive more timely investment information and be able to post questions, just send me a message to Ask to Join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Connor, that's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connermg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone, have a great week.